timing couldn't have been more perfect with our futures going live just a couple of days before the conference started. And to be there to show real-time market data, to actually put into practice what we have been preaching for the last 2 years was actually quite fulfilling, to be honest. And the positive feedback we got from all participants within the region, outside the region, and level of interest. I think what really stood out for them was the fact that they now have a place where they do have access to the market.
Welcome to Smarter Markets, a weekly podcast featuring the icons and entrepreneurs of technology, commodities, and finance, ranting on the inadequacies of our systems and riffing on ideas for how to solve them. Together, we examine the questions: are we facing a crisis of information or a crisis of trust? And will building smarter markets be the antidote? This episode is brought to you in part by Abaxx Exchange, bringing better price discovery and risk management tools to navigate today's commodities markets through centrally cleared, physically deliverable futures contracts in energy, environmental, and battery metals markets. Smarter Markets are here.
Welcome back to Gold for the 21st Century on Smarter Markets. I'm Dave Greely, Chief Economist at Abaxx Technologies. Our guests today are Dan McElduff, President of Abaxx Exchange, Siddiq Farid, Managing Director of Abaxx Spot, and David Gornall and Steve Lowe, Strategic Advisors for Precious Metals at Abaxx. We'll be discussing their experience and insights at the 2025 Asia-Pacific Precious Metals Conference in Singapore this past week, following the launch of Abaxx Exchange's Gold Singapore Futures contract and the launch of Abaxx Spot's spot market services and gold pool in Singapore. Hello, gentlemen. Welcome back to Smarter Markets. Now, you all attended the 2025 Asia-Pacific Precious Metals Conference in Singapore this past week, and I'm glad you're able to join us today to share your experiences and takeaways from the conference. For our listeners who may not be familiar, the annual Asia-Pacific Precious Metals Conference is organized by the Singapore Bullion Market Association and brings together industry leaders from around the world to explore opportunities and challenges in the precious metals industry. This year's theme was Forward SBMA 2030, Connecting Asia to the World. So I just wanted to start off, when you look back on the conference, what was the vibe? What was the mood among participants in the industry this year?
I'll go first, as this is my first time attending the conference. I found it quite exciting in the sense that even though it was an Asia-Pacific focused conference, there were participants from all over the world. And given the geopolitical situation, gold was the talk of town in terms of what's happening and why it's relevant for creating an Asia-Pacific market, given the recent dislocation issues that we faced as recently as the tariff tantrum, going back a few years to COVID. And that was one of the leadership at SBMA had that at the forefront of the agenda of trying to create Asia-focused kilobar market. So I think that was very relevant and quite exciting to see that. And it wasn't just the Asian participants that were talking about that. I think there were even people from across the globe were looking at that as a talking point and the need for having a kilobar contract and so forth, which obviously Abaxx is trying to solve for some of these challenges. I think that was quite comforting for us to sort of get that feedback in terms of what we're trying to build. And it was good to see associations there as well as practitioners commingling and sort of having a dialogue as to how we can foster this industry further.
Yeah, I'd love to follow that up, Siddiq. Maybe David or Steve or Dan. When you look back, we've talked a lot on this series about how physical demand's located in Asia, how they've had the dislocations with London and New York, how that's made pricing more difficult. I think there's often the sense of like, oh, well, that happened 10 minutes ago, so it's not important. How much was it, as Siddiq said, still on the forefront of people's minds, the need for better price discovery in Asia and less reliance on London and New York?
I think this has been championed by the local market for quite some time. I mean, they're desperate to get a reference price that they can call their own, and they've tried unsuccessfully to do that. So I think, by talking about having a contract that they could use as a spot reference or even a futures reference is something that gets their attention when you talk about it. And it's not dissimilar in all the other ASEAN countries. Everybody's got an initiative going on, it seems now, Vietnamese talking about dropping their GST, Hong Kong having another push, SGI opening up a vault in Hong Kong. So there's all these things going on. I think the main takeaway was I went to this conference years ago and there was a handful of people and it was very, very small. It was over in a day. Got to remember there's big competition for conferences generally on gold. You can go to one a month. And if you try harder, you could probably do more than that. So it was quite interesting to see how many people were gathering around the tables, various points over the 3 days and all the parties. It's got quite a big center for Asia Pacific now.
And Steve, I wanted to ask you, the key theme of the conference was connecting Asia to the world. On a practical or commercial level, what was your takeaway for what does it mean to connect Asia to the world?
I think just building on what everyone else has said, especially David, in terms of I've been coming to Singapore for 20 years and this year, sold out conference, 600 people, and it's all people from the region, right? It's not dominated by London in the slightest or New York. It's 500 delegates from the region and bordering countries. And the overarching theme was, not necessarily for Singapore, but the Malaysians wanting their own pricing mechanism, the Vietnamese, everybody in the region is desperate to have its own autonomy in terms of gold pricing. And the dynamics of each country, by the way, are fascinatingly different in terms of pricing, taxes, who can play in the local markets. And so to your point of how you then connect that to the world, it has to be connected in some way, right? And the SBA is striving hard to say, Singapore is going to be the hub. Everyone should come to us. We'll be another major center along with London and New York. And we will be equal in terms of pricing and clearing. And just for the record, Hong Kong is also trying very hard to do that. And you could argue China is in attempts to do that as well. So it's a bit of a competition in the region. But if and when someone succeeds and becomes a dominant player in the region, then that de facto will have to hook into the global markets. Gold is so fungible geographically that you can't have one without the other. So how you hook it up in terms of pricing, clearing, how technology can help, I'll keep you posted.
I'd throw in, the theme was connecting Asia to the world, but I kind of see it, the events of the past few days is the world trying to connect to Asia, which might have been what was missing in past years. And the events of the dislocations in New York and London have really triggered a lot more thought and I'd say a lot more action on the need to develop institutions here in this part of the world that are serving and similar in scope and in function to what's going on in the West. Because there were plenty of folks who were there, as Siddiq and Steve both noted, from other parts. And there's a lot of countries that have learned and want to leverage the successes that Singapore has had. They've been at this for a very long time with their initiatives around taxation and encouraging companies to center their trading operations here, which I think is a core advantage that Singapore has. And one of the reasons why we're so focused on operating here, not just as a company, but in this first market, which is really Singapore focused. The role that Singapore can play is continue to be the leader as these other nations are opening up their economies, improving access to the investment community, down to the retail investors who want and need more access and better access to gold markets. And it's just logical that all this progression that's been had in the region and all the desire for the Western world to want to expand business into the region really makes Singapore a critical center location for all that.
And Steve, you had shared there was a poll asking, I believe at the conference, do you believe that Singapore can become a global trading hub in 5 years' time? And I think the response was over 80% of the attendees responded yes. So how was that desire being expressed and the commercial need? What do you see there?
Yeah, just let me add to what Dan was saying. So I think it's actually really insightful. Like the conference really should have been, how does the West hook up to Asia as opposed to how does Asia hook up to the other global markets? Because it's very clear in talking to the representatives from Europe, London, North America, that the market is big enough and dominant enough that they want to be somehow tap into it much better, and they haven't. And everyone I'm talking to there is like, how do I expand? How do I get deeper? How do I build infrastructure in terms of trading capabilities, people, staff in Asia to continue to tap this market, which is becoming a bit self-sufficient. And so they really want to be there and acknowledge we have to have a local presence, because to actually service this market from Switzerland doesn't work anymore. It's too big. So I don't think they were going to name their conference that way. Yeah, here we are, we're big. You want to hook up to us. How do you do it? But quite frankly, it probably would have been a better title.
And could you put that in context? I think people in the United States or Europe who aren't paying close attention, sometimes they say, well, efforts have been tried in the past to have more of a gold market in Asia. But this time it's a much different situation, I think. And as you guys said, you've been going to the conference 10, 20 years. How are things different relative to even 10 years ago?
One observation I made, and we've been at this for a little more than 4 years, and I'd say my real commercial intro into the gold market, being more of an energy guy, was when Steve brought me to the conference 2 years ago. And we were introducing our ideas, which haven't changed a great deal. We just firmed them up a little bit and delivered them last week. But the thing that we heard a lot back then was, great idea. We've tried it before. What's different about you? How are you going to get the banks involved? And sticking with me, there's an observation I've seen in my short time in the market, which is that there's these regional companies who are pretty prominent at the conference, which have grown dramatically in the last 5 years, even in the last 3 years, as dealers and serving local markets downstream. And I think they're at the conference looking for liquidity from others so that they can continue to grow. And these are firms that 5-10 years ago were capitalizing the tens of millions, and now they're capitalizing the hundreds of millions. So there's kind of a whole new class of participant that's there, that is, they're not just trading, they're dealing in the gold that's making its way to these households. I was sitting with David during one of the presentations, when I think the number, David, is 1 out of every 8 units of gold is sitting in households in India. And that's of all the gold ever produced. And it's an extraordinary number. It shows you the scale of the importance of gold in the region down to the household level. And these newer companies are stepping in and being intermediaries between banks and those players, banks being the traditional liquidity providers. And I think there's just a tremendous growth in diversity of the players that I don't think that was present during previous attempts at what we're doing. And I think that's the single biggest factor that's different.
And David and Steve, I'm interested in your comments on what Dan said, given your long experience in the market. And then the other is, we talked with you both in the past about how the business, say at Scotia, worked, or how the gold markets in London have worked. When you look at kind of the existing ecosystem in Asia right now, are there certain elements that you say oh, this part is needed relative to what we have in, say, New York or London?
First one, somebody would jump up and say straight away, central bank. We'd love to know if there was an ambition within a central bank somewhere in that geographical area that performs the same role as the Fed or the Bank of England. So I think that's the one bit that's missing. And if there was central bank gold sitting in Singapore, you'd see that the local market would develop quite quickly, because all the products that spin off of that, all the repos, the reverse repos, and the deposits that would come about of that business would then create extra liquidity and more players. And there does seem to be, Dan talking about the diversity there, the sheer number of people that are involved in the market now that weren't involved in it in 10 years ago. And then they're taking on different roles as well. They're not price takers, are they? They're price makers now. That's the big difference. They're creating their own price. And they're becoming FCMs, which we would have expected 10 years ago. We'd have said they all have to be banks. So I think there's some things that have happened that are great. And I think the next big achievement would be to get some central bank activity.
Yeah, from my perspective, and sort of going back to your question to Dan, and I just think the local markets, you want to call them for argument's sake, are just much more sophisticated. They're much more sophisticated in terms of their understanding and products within their own region. But I think they've just sort of copped on to the fact that as a government and as big banks, the gold market is really, really important across the region. So you just see more and more players getting involved. And I think, are just much more sophisticated than they were naturally 15 years ago. And so you see them there, you see them all trying to cultivate their own local markets and basically satisfy the huge demand out of the region. And we can talk at length, but gold is where it is, lots of geopolitical issues, conversations going on. And so the Asians, as a part of the world, are big, big, big buyers of gold. And so governments and countries are figuring, okay, how do we participate? How do we satiate that demand? How do we take our pound of flesh through taxation or whatever's involved to do it? So you definitely see all of that going on. And then there's no doubt, as I've said before, that the region needs its own pricing. It needs its own clearing and settlement. It needs what, frankly, Abaxx is doing in terms of creating a reference price and creating local settlement and infrastructure. It's crying for it. And there's no one out there you talk to who doesn't agree with that. Nobody. So,
And I'd love to dive into the piece of what Abaxx is doing. The conference was very well timed in terms of last week, Abaxx launched physically deliverable gold Singapore futures on Abaxx Exchange, and Siddiq, Abaxx Spot, launched with its services, spot market services on Abaxx Spot for the gold market and the gold pool. So I was curious, how was your reception at the conference, and what did people want to discuss with you? Maybe we can just kind of go around the horn here, starting with Siddiq.
Yeah, so I think timing couldn't have been more perfect with our futures going live just a couple of days before the conference started. And to be there to show real-time market data, to actually put into practice what we have been preaching for the last 2 years was actually quite fulfilling, to be honest. And the positive feedback we got from all participants within the region, outside the region, and level of interest, I think what really stood out for them was the fact that they now have a place where they do have access to the market, right? In the past, they necessarily haven't had that. They had to go through intermediaries to get access to the market. So I think that was one big selling point. We spoke to a lot of wholesalers, dealers. That one thing that really stood out from them. And the second one was the transparency this provides in terms of pricing. And the current incumbents, I think, they see this as an opportunity in theory where one will allow them to get better competitive pricing for them to source the metal, but also a marketplace or platform rather, where it will have a wider pool of customers to sell into or buy from. I think that was very well received in my conversations with various participants within Asia, as far as participants from Dubai as well too, were quite keen in getting on board and getting access to what we are building.
And Steve or David, as we continue around the horn here, what was the reception? What were the types of questions you were getting and types of comments?
Well, asking about where they can find the price. They asked about open interest as well. I think they weren't so much asked, if it was successful or not. I think they realized that it had launched and they were trying to find how they could monitor the price formation. What places were we using to store? What type of customers? It was all the sort of general questions you would expect for somebody that was doing a bit of toe dipping, trying to find out what was going on, what they were missing out on. Because I think the name has managed to spread around the conference quite quickly. It hasn't been lost on our competitors that were there. I think one or two of them turned up at the round table. But from a regional perspective, I think everybody's sort of wait and see and watching the volumes on the board. So quite a lot of interest.
Yeah, and the last point, which I think is not surprising to anyone, is just liquidity, right? I mean, I think people were generally impressed that not only did it start, but it actually traded both days before the conference, and they weren't huge amounts, but they weren't nothing. So people are like, okay, well, they were like, oh, that's pretty impressive. And then they just want to look at the liquidity of the contract in terms of what's the spread. And as the spread tightens, which it already has significantly since day one, and we're only at day 4, more people are looking at it with sort of, okay, I think I probably need to get involved because the spread's tight enough and people just need another portal for liquidity. So it just makes perfect sense for anyone who's a buyer or a seller in the region to be on the platform willing to buy and sell, because there will be opportunities, great opportunities, and better pricing than you'd probably see anywhere else. I generally think the reception was great. And people just saying, okay, now that you've told me about liquidity and you've told me about market makers and what the perceived liquidity will be going forward, how do I sign up? What do I need to sign? How do I get involved? There's no downside to get involved and lots of upside, in my opinion.
And how about you, Dan? What were people asking you?
There's a couple of favorite responses and then one that I kind of turned back on folks. There's a real natural buyer that's in the market, and we sat with him and helped him to understand it. And you, a buyer for manufacturing, we sat with him and explained the process. And he came to understand that he would have access to buyers that he knows and sellers he doesn't know. And the seller, in that case, he's like, why would I say no to having access to more sellers and a price that I can take action on? Where do I sign? On the flip side, we spoke to a prominent refiner, and and he's not the only one who's given this response, but why would I not want to be in a place where I could offer my goods to another pool of liquidity? And in our job, we are often chasing the trading companies to be the ones that are going to be the catalyst in these markets. And then the next step is to bring in the people at the ends of the value chain. I saw an eagerness, a willingness, and an ability for parties to engage in what we're doing in the short term across the spectrum. And then you go to the traders and they're always going to, their first question, as Steve noted it, is where's your liquidity coming from? And we're an exchange operator, right? So the liquidity doesn't come from me. I'm turning that question back around to folks. I'm asking you that question. When are you going to bring liquidity to our markets? Because we got these other guys, the buyers and the sellers that are natural coming in. So I think you're the answer to your own question. And they didn't laugh me out of the room when I was going back at them with that one, which was encouraging.
And Dan, how important do you think it is the fact that, unlike some of the other markets that you've launched over the past year, that this one you can kind of arb into New York or London or other markets? It's not like a true greenfield market the way some of the energy transition commodities have been.
I mean, there's no more mature market than gold anywhere. And it is tremendously efficient. It's supported by what I call a dealer market in most cases, right? You're not going through, there's so much volume in the institutional marketplace. It's not going through a clearinghouse. It's going through this dealer web of bilateral transactions. And it's so distributed that there is operational and credit risk out there that doesn't necessarily have to be if this stuff is bought into multilateral facilities like CCPs. The events of the last few years has kind of exposed some of that with regards to the volatility, and more stringent risk practices are always recognizing that there's this amount of business that's not being done and could be done in a better way. So we're getting the benefits, in introducing something like this at a time when there's real commercial need for regional pricing. It's an opportunity for people to put some or more of their business into multilateral facility or CCP, like the products and services that we're offering. And it's a unique opportunity and time to do that. And the more we can take advantage of that from a timing perspective, getting this thing off the ground, because we could share that tangible reality with them, we're in great shape. It feels pretty good. And that's going to bring greater awareness to what we're doing overall as an institution, and providing these services here in the region, and as is our intention, to give people in other geographic regions access to these markets more effectively.
And I wanted to zoom out to some of those recent events that you talked about, Dan. And curious, it's been a lot happening in the gold market, record high prices, all sorts of reasons for geopolitical volatility, concerns about the dollar, looking for safe havens, all of that. What were some of the important ideas and responses to recent events that you heard at the conference? Is there any ideas that you heard that you were like, oh, that's surprising. I need to think about that some more. What were some of the big takeaways from the conference for you?
There was nothing so shocking to me, but all kind of in positive lights, in terms of why the market's growing, how it's growing. The diversity thing to me was huge. It seems there's just as much or more of that in this region than anywhere. And as much a remedy to the problems that may emerge as anything, and maybe make it so those problems never actually do emerge, right? Worry about operational risk, we worry about credit risk. But if we have more and better diversity and those new players are willing to do business a different way than the old players, if our model takes hold, then that's all going to be positive. And no one seemed to have a negative reaction to that. That's like the vibe. It's going back to your first question. What was the vibe? It seems the market as a whole is moving in a direction where these things are within reach. Singapore as a whole and SBMA is a big part of this. The things they've done over decades to encourage more reliable, safer markets, they made great strides. And now they're in the midst of a project called Lion 2.0. And it's really bringing things across that last mile. And they're patient and persistent, but they made progress all along the way. And I think their objectives are going to be met much sooner. As conservative as they're being, I think things are coming together in terms of recognition of the problems and the availability of solutions and parties that are willing to participate in those solutions. That's really the main thing. And I honestly believe that these are kind of privately initiated things that are market oriented. I prefer to any government solution every time.
And David, what were you taking away as some of the important ideas that you heard discussed at the conference?
I love listening to the feedback that some of the banks get from their clients. And I think one that shocked me, I sort of half expected it. I didn't think it was going to happen so soon, is the amount of banks and clients that think that the prominence of the CNH and the euro, the currency, usurping the US dollar, really. They say a reserve currency has like a 50-year lifespan, and not many people were writing it off even a year ago, but there's more and more people talking about it in those circles. That kind of shocked me a bit. The amount of central bank gold buying that's going on, and the amount of central banks that are letting everybody know that they're in the market for the long term and they're going to carry on buying and carry on disposing of dollar assets as well. That's something you wouldn't have heard from the groups of central banks in surveys years ago. So it's giving you a little roadmap of what's going on. And I think the last one was with the price discovery for non-49s kilobars. We were saying, well, you could use this as the base price and you can trade switches into other bar sizes. And then somebody told us a couple of days ago that you probably don't need to worry about the growth in the 295 market because it's commoditized. It's quite a strange effect now because the 49s gold premium is less than the 295. So more and more people are looking at 49s and not 295. So I think we're getting a sort of concentration building up around 49s kilobars as opposed to 295s. And for a refiner, it's an awful lot easier, we are told, to produce a 49s bar than 295. So yeah, there's a sort of bit of macro in there, a bit of physical gold, just learning lots of little pieces of takeaways throughout the conference, really.
How about you, Steve? Any important ideas or takeaways?
I'm almost going to take the other side of David's trade there to a certain extent, which I think is useful. So and again, one, I have a very bad track record trading gold, and two, I'm not giving any advice here. But if you came out of last year's conference, you were a buyer of gold, right? Literally every nation was talking about people lining up to buy gold. It was such a prevalent, you know what? The physical demand for gold right now is off the charts in this region, and that's going to support the market, right? And then this year, I got not the opposite, but I got the sense that, you know what, physical demand is now tired in the region, mostly because of where the price is. It's like, now it's expensive. At this price, jewelry's expensive, buying hoarding bars expensive, right? Which, and again, as we talked about, I worked for Scotia before. Scotia, supply and demand, that's all we're about in terms of trying to look at the market. Supply and demand in terms of physical. That can get overridden in a heartbeat by two central banks coming in and buying, and the price is going to go up $100. But in terms of my takeaway from regional physical demand, that it's tired. And quite frankly, I was surprised. I thought it would still be a raging buy and people would be lining up and jewelry would be flying off the shelves. And that wasn't the case. It's not what the various respective countries were telling me. So I just found that interesting. And again, in terms of helping predict the price, it's not, because if 3 central banks come in and buy 500 tons of gold, and price is going to rally $200. But it was just interesting to me.
Except India, the representative of the World Gold Council from India, he did a presentation, and he actually had pictures of they have a festival that happened as recently as I think it was April or May. I can't remember exact the date that he had mentioned. But in his presentation, he had pictures of jewelry stores in India, and they were packed, right? Even at these prices. So I would agree with Steve into the conversations across the globe, but I think India was an exception. I think there, regardless of the prices, given the festival and so forth, they're always buyers for gold.
If you have an auspicious day in India, you buy it, whatever the price is, and you line up and throw that at the temple. It's a remarkable culture for storing gold. Remarkable.
I wanted to ask you all as well. There's been increased coverage in the media of interest from family offices, high net worth individuals in getting physical gold. I'm curious if you saw any participation from family offices at the conference, or what was your sense of the appetite from this, what I would assume would be kind of a relatively new group in this market?
So there weren't necessarily sort of family offices in principle, but there were a lot of wealth solution providers or dealers that cater to that segment of the market. And again, to Dan's point earlier, where we were talking to this particular buyer in Malaysia, similar to then, a lot of these people were actually quite interested in the physical market that we're trying to create over here that gives them access to 49 kilobars. Not only gives them access, but gives them a vehicle where they can store the gold as well too, and which also creates a lot of other utilities for that gold. So it's not a dead asset. They have the ability to do other interesting things with it, to generate a yield per se, etc., whether it's through lending or hedging it using the futures. I think that was quite interesting for some of these players that I had conversations with.
And I'd love to come back to this idea of Singapore becoming a global trading hub for gold in the next 5 years. That was one of the conference polls that most people agreed with. And I wanted to ask, as we wrap up, what do you think it'll take to make Singapore a global trading hub for gold over the next 5 years? And what would that look like in a world where you're seeing increased desire for pricing in all these different locations? Maybe we could start with you, Dan.
I think Singapore has to stay the course. I think they've really learned a lot, not just in the precious metals markets, but they've done a lot of work in a lot of markets to establish themselves, and they've aligned their laws and regulations, policy, all towards the goal of attracting infrastructure that can help them to achieve that goal. And we're one of the pieces, or we represent one of the pieces in terms of providing the infrastructure to have efficient settlement and price discovery. And they've supported efforts along the way towards that goal. And sometimes you could have a great idea and just have bad timing. But if you're persistent in pushing towards your goals, and it can come true. So I think they've done the right things. I think what we're doing, we've said it for a long time, is very much aligned with the goals of Project Lion, particularly Lion 2.0. And they stay the course. I think it happens certainly within 5 years.
I'll add to that because I think it's so important that the SBMA or group of people out there in the region, they have to work with a collective and collaborative mission to build Singapore. The problem with many, and it's not necessarily a problem with the SBMA, but the problem is to try to get institutions to stop thinking of their own self-interest. What's good for my bank? What's good for my trading company? And try to put that aside and say, what's good for the market? How do we build a bigger pie in Singapore, which then I can build more money out of? And it's an incredibly difficult thing to do, especially when you're talking to some of the larger incumbents who have a vested interest in not developing the market. But you just have to have the will and the drive. And for big institutions and some of them say, I'm going to support this because in the long term, this is good for the region, it's good for us. And so, you know what, I'm just going to get involved. And maybe it's not going to be perfect to start with, but I'm actually going to get involved for the market's sake. And that's just a really difficult philosophy to ingrain in people.
Thanks again to Dan McElduff, President of Abaxx Exchange, Siddiq Farid, Managing Director of Abaxx Spot, and David Gornall and Steve Lowe, Strategic Advisors for Precious Metals at Abaxx. We hope you enjoyed the episode. This concludes our podcast series, Gold for the 21st Century. We'll be back next week with our new podcast series, Summer Playlist 2025. We hope you'll join us.
This episode is brought to you in part by Abaxx Exchange, bringing better price discovery and risk management tools to navigate today's commodities markets through centrally cleared, physically deliverable futures contracts in energy, environmental, and battery metals markets. Smarter Markets are here. Contact us at sales@abaxx.exchange to get started. That concludes this week's episode of Smarter Markets by Abaxx. For episode transcripts and additional episode information, including research, editorial, and video content, please visit smartermarkets.media. Please help more people discover the podcast by leaving a review on Apple Podcast, Spotify, YouTube, or your favorite podcast platform. Smarter Markets is presented for informational and entertainment purposes only. The information presented on Smarter Markets should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on Smarter Markets are those of the participants and do not necessarily reflect those of the show's hosts or producer. Smarter Markets, its hosts, guests, employees, and producer, Abaxx Technologies, shall not be held liable for losses resulting from investment decisions based on informational viewpoints presented on Smarter Markets. Thank you for listening, and please join us again next week.